Hey, what's going on, guys? It's Terrence Ray, and this is Friday night. Wanted to come in and something I'm gonna start doing on a regular basis. Hot topics, and we're gonna come in and chop up some stuff, just some stuff that I have on my mind that I like to come in and chat about, and somehow I find a way to relate it to the markets as well. What you're looking at right now, I'm getting ready to. This is one of my favorite podcasts out right now on YouTube, the All In Podcast with what is it? David Freeberg, I think Jason Calacanis, David Sachs, and Chamath Palihapitiya. And a lot of times they come on here and just chop stuff up. Lately, there's been a lot of. I got a call from one of my homies asking me about the dollar, and I've been hearing that lately a lot. We got to take our money out the banks and what we're gonna do, this, that, and the third. And I want you to hear Chamath's um take on it, right? I think it's a real good he gives some real good insight to it. So I'm gonna let him speak and then I may pull up some stuff, some visuals to look at on some charts maybe. Let's take a look.
China has had so much dominance as a trading partner. And the reason why China's central bank has the largest amount of foreign US dollar reserves, about $3.5 trillion, is exactly because of the thing that you want to ignore in order to have this highfalutin intellectual conversation. It is pegged to the US dollar. And until it is unpegged in a free floating currency, we will never know what the real market clearing price is.
And
so China has been able to, hold on, China has been very effectively able to manipulate this currency since they were brought into the WTO in order to engender that trading partner status. They were able to artificially suppress the value of their currency so that exports from China could gain traction in countries all around the world. You have to take into account this currency peg, and you have to ask the question, where would the currency be if it wasn't free floating? And then what would the incentives be for folks to replace the dollar? And I think that there's a lot of interesting questions there that are worth asking, but I think you have to be a little bit more intellectually honest to have the discussion.
And just for clarity, Chamath, you said they already have these deals with Pakistan and Brazil.
And Russia.
You meant Pakistan and Russia, I think. They already have those deals with those two.
Pakistan and Russia.
Right. Okay, good. I just want to make sure it's clear there. Sachs, do you have any thoughts on this?
All right. So if you listen to him and he's talking about the pegging of currencies, and then he's talking about if the currency is free floating, and if it's so basically China manipulates, like they manipulate their currency. And so you're basically saying you'll never know what the true value of the currency is, or whether it can survive China being the yuan or any one of these currencies if it was allowed to operate freely in the free market. And you would have to depeg all of these currencies. And what he's saying is, if I was to pull up a chart right now, which I will do, um, if I pull up a chart, let's go ahead and I already got one up for you all. So let's take a look. What you're looking at right now, this is gold. These are gold futures, right? This is measuring the price of, I want to say, ounce per ounce of gold. And right now you can see gold, even though the futures market is closed, you can see there's a bid and ask spread right up here, 1992.90 and 1994. So let's just call it, we can look over here and just call it 1990. So $1,990 per, I want to say, I'm almost certain it's per ounce of gold. So, but that's in dollars. That is in US dollars. If I go over here and I pull up um, oil, light sweet crude oil futures, this is giving you the price of crude in US dollars. These commodities, if I go pull up wheat. I could pull up any of these things. I could pull up wheat. These are wheat futures. I don't know if it's measured in bushels or whatever, but this is $673. One of the things that he didn't talk about is the United States having the most liquid markets in the world. And so that's why, well, if you notice that when the war started with Russia and Ukraine, that some of the Russian billionaires, some of their money was able to be confiscated, which I don't think that that was a smart decision. I don't think that that was wise to do. But why would they have the ability to do that? Because they have their money over here. They want to participate in the United States markets because we have the New York Stock Exchange. They don't, these companies want to release, they want to take their companies public on the New York Stock Exchange, not in any other exchange. Not saying that that's going to always be the case, but currently it is. And so I just think that, like he was saying, now I'm gonna play some more of what he. I'm gonna let you hear some more of what Chamath is saying. Let's uh let's see. I want you to hear some more. He gonna talk a little bit more about it. Just give me just a second.
It's not
It's
funding
the
anything
VIG.
we want. It's just the VIG. It's going to be
The
more
VIG.
than a quarter of our total federal budget.
This mathematically is to keep rates high.
That VIG payment, you start taking risks.
This is also where you have to expect the Fed will really want inflation to stay high. That's sort of what we've said before. The only way out of this mathematically is to keep rates high. But the other thing, David, that when you mention all of this is, what about every other country? If you think that's happening in the United States, I think it's important to make sure we at least consider every other major economy, because it's not as if they're pristinely sitting on the sidelines while this happens to the US. This is my whole argument the whole time, which is, if you're going to have this argument, you need to do it thoughtfully and relatively, right? Because the euro is in the same amount of trouble. If you look across, it's not as if China is actually sitting pretty and smelling like roses either. Every major economy or trading bloc in the world is going to go through this at the same time. So it becomes a relative trade argument. And there, I just don't know enough to know whether the US is poorly positioned versus Europe or China. But it just seems like you get back to a place where it's like, okay, we need to find the flight to safety. What is the canonical flight to safety? If it's not a commodity like gold, it's probably the dollar until it's not.
Yeah. Okay. Freeberg.
So, in a nutshell, like what I would tell, like, now look, to be honest with you, I do think at some point that these countries would try to get away from the dollar. I think it will be, if I was, game theory, if I was one of these countries, I was the president of one of these countries, and I would want to decrease my dependency on America as well. So I'm not saying that it won't happen, or not that it shouldn't happen or anything like that. I'm just saying that, looking at it honestly and realistically, panicking about it, because I really don't think, other than buying gold and silver, like buying physical gold and buying physical silver, what are you gonna do with those gold bars? What are you gonna do with them? So you have gold bars. What are you gonna do? You're gonna do what? If you want to go purchase something, you're gonna have to take those gold bars and go somewhere and liquidate them. You're gonna have to find somebody to give you what? Fiat for it. You're gonna have to go take the gold bars, unless if you wanted to go purchase a home, you can't just take gold bars over there. The person might take them if they already got cash, they cash rich. But 9 times out of 10, they're gonna say, "Man, I can't do nothing with that. Go bring me the cash equivalent of that gold bar." They bring you the cash equivalent of it, so you still took the gold and turned it into cash. And if you turn it into cash, what kind of cash you gonna turn it into? Especially if you live here in the United States of America, you're gonna turn it into US dollars. You're gonna turn it into wine. Where you gonna take it? So I don't think everybody is like sitting and like thinking about it logically. Like, there is no until we get somebody gonna say Bitcoin. I'm gonna have to kill the Bitcoin argument right now. Let's go ahead and kill that, so that's never spoken of again. I'm gonna pull up Bitcoin. I'm gonna pull up now. Will you notice when I click on BTC, it got a slash up here and it says USD. That's because the price of Bitcoin gets its value in its relationship to US dollars. Right now, you can see the market moving, right? Because Bitcoin doesn't stop moving. Now, that's one thing I wish all of these markets would adopt. But if we're looking at it, if we're looking at this, so right now, Bitcoin is trading at 27,272 what? Dollars, US dollars. So that means that, so what that's telling you is if you wanted to liquidate your Bitcoin position, you're going to get more cash dollars. You ain't escaping it. You can't take this Bitcoin and go pay off your house. You can't go buy what you going to do what you going to do with it? You can't go buy you a nice car with it. They're not going to take it. You're going to have to take it and turn it into cash. So, and people could say, well, I'm just going to stay invested in Bitcoin. If the dollar fall, look, if the dollar fall and Bitcoin rises or goes up, think about what you're saying. So what's going to happen is the dollar loses its value. Bitcoin's value goes up to 60. I said it doubles at 60. So what that means is it's going to take more dollars to purchase whatever you were going to purchase because the purchasing power of the dollar went down. But you still got to take your Bitcoin and convert it to what? Dollars. So all you did was take something that was 30, it went up to 60. Now you got 60,000, but the value of the dollar decreased. So it took all of these 60,000 to buy the same, you had the same amount of spending power as you had at 30,000. That's what Chamath was saying when he was talking about pegging, depegging. You would have to get these, whether you want to call Bitcoin a commodity, a security, whatever you want to call it, you have to get these, whatever these underlines that whatever we want to call them, whether it's gold, silver, Bitcoin, wheat, corn, soy, I don't care, copper, you have to get them depegged from the dollar. You have to get them off of the dollar so where that way they have their own value. And we got to find a way. And so that means that society will have to set that value. Almost kind of like if I had corn and then I went somewhere and went to market and traded my corn for some bushels of wheat, something like that. But as long as you're gonna use it and relate these things to dollars, you're not escaping anything. You understand? I hope that made a little bit of sense. I be listening to this stuff and people be like, "I'm just gonna run the Bitcoin." You just gonna what you gonna do with it? You gonna watch it go all the way up to 100,000, and then do what? You gonna cash that Bitcoin in for dollars. Now, as a trading vehicle, and I'm just using Bitcoin, I could pull anything up here. I could put lumber up here. It doesn't really matter. They're all being measured in dollars. That's how they get that. That's how we're determining what the value of it is. So at some point, now I'm no fool. I can see where the world is going. And if we currently continue to do what we're doing, and when I say we, I'm speaking as in the United States of American government. If the government continues to do what it does, then other countries are going to try to get away from that dollar. And ultimately, it's going. I think it may get ugly. I just can't see the United States just allowing that to happen. But then again, we'll see. So hey guys, I'm gonna keep doing. I enjoy doing little stuff like this. You know, kind of stepping away from the market a little bit, but still giving a little bit of take, and still finding a way to make it tied into something that we can use in the markets. Right? You can always trade currencies against the value of the dollar because the value of it is going down and we can see that. Like I don't need anybody to tell me that. If you put in dollar sign DXY, this is the dollar, right? And we can see it on a chart. And we can see from these highs that it has gone down in value. What do you want to do when the dollar is going down in value? The things that it's traded against, you can then purchase those. And there are a number of things. You can come to the Forex market and you can trade the euro, right? We got the euro USD futures. You can see it's been going up. This is a 6-month chart. You can see it's up, right? You can come, you can come and look at gold. You were trading gold. You can see that gold is up, right? So these are the things. So if you're asking me what to do, I would trade things that have opposite correlation to the dollar, right? Or if the dollar is going down and these particular currencies or whatever you want to call them are going up. And that's how you can profit from what's going on. As long as the dollar stays down, you can have a bullish bias in your Forex pairs that are against the dollar. And with that, guys, I hope you got something out of it. Hit that like button, hit the subscribe button, comment, and let me know what you think. Let me know your opinion. You don't have to agree. It's all good. With that, guys, I'm going to be out. Peace.